What's up, guys? It's October 4th, 2023. We're going to do a breakdown of the E-mini. Yesterday was a pretty strong sell, and this was caused by news. It was jolts, I believe. Then we had a gap down, 50% pullback, and a sell, a continuation. They made about 10, 20, 30. So they had about a 50-point trend, a pullback, and then they made another 20 points. I have something in my throat, excuse me. And then after this strong sell, you can see the market starts to range. After an expansion, the market contracts. So market cycle on the lower time frame would be expansion, contraction. See, tight range, wedge bottom. Yesterday was a really good day. There's a lot of range. Hopefully no one was trying to buy the dip. We see a lot of selling pressure throughout the entire trend. A lot of wicks. And the bars also get skinnier. See the biggest bars at the start of the breakout, and then just look how they just continuously get smaller, smaller. This one's pretty big. That's another breakout bar. Smaller, and then look, they get really small until it stops for the pullback. And the pullbacks, we talked about it before. The pullbacks get bigger as the trend goes on. Look, one doji bar, big bar, 3 bars. Okay, that's not too bad. But then we get a double bottom and a real pullback. It sure was a great day for day trade, for everyone if you were shorting for bears. Yesterday was a good day for bears. Today, not really a gap up, but we're opening above the leg yesterday with a strong bar. See the first 6 bars of the day. So that's the first 8 bars. First 6 bars are a range. Bulls push up and bears short range highs from yesterday. This would be about right here. Bulls try and break out to the EMA, and they fail in the morning. I think there was a news announcement around here. We can see lots of ranging bars. We have a big up, big down, and then we get 3 dojis after that. So that just means we're in a range. Buy low, sell high. This is not a breakout. This is a range play. This could be a bear leg in a range. This first 6 bars are telling us bulls are buying low and they're trapped. Bulls do get trapped here. And then bears get a nice breakout to the downside. So after the market contracts, we can see a range and then some sort of continuation on to the next day of the range. So that's the first 6 to 8 bars. This is an interesting setup here. So bears get leg 1s and legs 2. Here's, you say this is 1 leg, 2 leg, 3 leg into support. Right around yesterday's low of the day. They were a few points away. Let's see. 52. So they're about 3 points away from yesterday's low. And bulls don't want to. If bears get to yesterday's low, they may try and continue the downtrend. So I think that's what causes bar 13, is that bulls want to defend the lows because it's a full-blown trend if bears keep shorting. Bar 13 is a huge bar, and bulls make 20 points in about 15 minutes, 5, 10, 15, and these lines are 10, so about 20 minutes. And when they get back to the breakdown point, it's common in range-bound environments to close gaps. So if this was a bear trend, right? So yesterday's bear trend. See how these gaps stayed open? This bar can be considered a gap. This bar is a gap. This gap's all over the place. This is pretty much one big gap like that. So that's in a trending environment. And then in a range-bound environment, these gaps are getting closed. See that bull bar closed. At one point this was closed, but bears pushed it back down, so they're keeping this gap open. You guys kind of catching my drift now? And again, I'm a student of Al Brooks. These are Al Brooks gaps. I don't think anyone else in the market talk about gaps how Al Brooks does, but if you guys are starting to understand this, I really recommend you guys check out his website and get his course, because everything's just 10 times more in depth. It's like an 150-hour course compared to a 20-minute video. So I really urge you guys to get the course, study, and join the Discord group. Also, my name's not the same in Discord, so you guys won't be able to find me. But just say like, I want to learn more about Brooks if you do decide to join. Back to the price action. So bears are keeping this gap open, and this gap open here. So this is kind of one big gap, and for us to be in a range bound environment, bulls would want to close that. See how bears are trying to close bar 13's gap, but they fail right here. So that means, look, we have a bear gap and a bull gap. So where the market's stuck between these two pressures, who's going to have more pressure, the bears or the bulls? We don't know. That's bar 16 is a big emotional bar. After another bar 13 was a big emotional bar. The market went up and down very fast. Up 20, down 18. Almost a reversal, but they didn't. If you guys, I really check out today's short I posted explaining the specific setup and how to capitalize, because this was a really good trade I took. This was the low of the day, and I was able to spot it before it played out because of bar 16. Bar 16 is a bear trap. So we're up to bar 24. It's about 2 hours into the day now, and here's that double bottom I was talking about. And the reason why this is so important to understand is because if bears go short here, if I'm gonna delete, so you guys see the gap right here, right? So I'm gonna delete this. If bears go short on bar 16, they have to get past bar 13 bulls. If bar 16 broke bar 13, it would run their stops, and that would be either a reversal or a continuation. We don't know. It never happened. But since this happened, this is what traps weak bears. A lot of traders are going to see that and go short and get no continuation. Smart traders know we're in a range and it's buy low, sell high. So this is what causes, this is the double bottom explained. I guess that's what I explained in the short. So there you guys go. And that's what causes bears buy back their shorts and bulls buy their longs. Range bound environment, gaps are getting filled. Remember, in a range bound environment, gaps get filled. In trending environments, gaps stay open. So this bar 13 failed to close the bar 12 gap, and the bar 12 gap stays open. Bar 23 is starting to close the bear gaps from earlier in the day. You guys see that? Yeah, I'm gonna delete this. So bar 23 is starting to close these gaps, and if bulls close the gap, they're gonna go for a measured move up, because that would mean they're trying for a breakout. If bulls got up to this price, what are they gonna do? Stop buying or continue to buy at higher prices? Bar 23 is the biggest bar after 5-10 about 20 minutes of selling, and we can see the bars getting bigger and bigger and bigger, right into support. It would be normal to take profits here, and I took profits here. I was in this long. Right into support, and then we start consolidating. The market's figuring out, are we pulling back, are we reversing, are we continuing? Ends up being a pullback. The market pulls back, bulls are taking profits. They get 3 pushes down, that creates a wedge or a bull flag wedge bottom, and they break out. Look, bars 25 and 27 are bear bars, but very bad context to short. One could say, oh, we're at the high of this range. We are at the high of this range. And if we're at the high of this range, then why did bar 24 happen? If we're at the high of this range, wouldn't this bar be a little bit bigger? Same story here, same story here. But the price is different and the patterns are different. Double bottom, this is a bull flag. This is very trap traders. This is traders taking pullbacks. And bears are obviously getting trapped here, but they start differently. They look the same, but they start differently. We get continuation. Bar 28 to 30 is pretty strong. Bulls make their 10 points again, and they go again for another 10. This is the bigger time frame EMA, 20 EMA plotted on the 5-minute chart, 1 hour time frame. Okay, we're at about midday here, and bulls have had multiple legs. Leg one, leg two, and a leg three will fail at the high of a range. That's what we have here, leg one, leg two, and the legs are shrinking within a range. See, we can see it. Like here is the leg one. Here's the first flag, and then the second flag is getting smaller, and then the third flag fails. So we're definitely in a range-bound environment, and bulls do want to get that breakout, but fail at the EMA, which is roughly the midpoint of yesterday, 50% pullback, and that lines up with a midday reversal. Bears were not making money here, and they were getting trapped, and finally from bars 41 to 43, they make a little bit of money, so they're going to try and make money again. Also, the bulls got 3 pushes up on this flag here, 1, 2, and 3. So not only do we have a weak pull, trap traders, bears want to get out, bulls want to take profits at the top of resistance. We're above the daily highs this far. So if we're at the high, the market's at this moment is seeing this as this is resistance, and in a range, bulls take profits at resistance. In trends, we break resistance until we get to a major resistance. So bears are starting to sell midday. Get about an hour in, and we get good selling. Not the best selling actually. There's a lot of a lot of underlying bull pressure. There are 4 bars right here, 4 bull dojis in a bear trend. That's not good. We have a head and shoulders reversal. Was that higher low? We have 1 push, the head, and then a lower high. And the market does sell. We get a bull flag, and now, just like down here and up there, where all of the bears were getting trapped, now bulls are getting trapped, and I was one of those bulls. I bought bar 44, and now bulls have to sell out of their position, and now bears get a turn, because in range days, gaps get closed. The bulls close the bear gap from here. Now the bears are going to try and close the bull gap. Although there is still this gap open, that means there's more underlying bull pressure. All the bear gaps got closed. Look. Closed, because you guys see, like, this is the gap, and it's getting closed by these bars right here. So that's how Al Brooks likes to measure strength. It's really interesting, because I talked to a few traders about gaps, and they understand what a gap down is, and it means bearish, but they missed the part about the bars, and it took me a while to understand the bars are gaps, and they just are, because it depends what chart you're looking at. Maybe on this chart you see a gap down, but you just look at the overnight chart, there's no gap down, it's just bars. You know what I'm saying? So that's why Al Brooks likes to teach them gap downs, gap ups, big bars. They're all gaps, and they should be seen as a sign of strength or weakness, or however they're supposed to be interpreted. I personally don't know if Al Brooks does wicks, but my mentor, she tells me that she does the bodies, so that's what I do. I do bodies. I really urge you guys to check him out, because I'm starting to get momentum in my trading, and I want that for everybody. That's why I made this channel. It was recommended to me by someone else to start talking about the markets. I don't know if he meant to make a YouTube channel, but this is the best way I thought I could do it, and I wanted to meet more traders learning to trade. So back to the price action breakdown. Leg 1, leg 2, and leg 3. This is a tough downtrend, because there's so much buying, but it's a range downtrend. It's a downtrend in a range. So if we understand it's a downtrend in a range, that should help us hold. It helped me hold a little bit. I was short. I got snapped against, but here's another. Oof. Play it out to bar 65. Okay. Here's another trap. I got trapped here. And I even said, I was like, man, this kind of looks like a trap. I didn't believe it, because I was in profits. And, of course, it snaps against me. Just like right here, if bar 56 broke out, if it was so strong, how come bar 56 didn't break out of bar 55's low, right? And bar 55 we know is a range bar. There's only two types of range bars: trend bars and range bars. This is a range bar. This is a range bar because it has a wick and a small body, so we know there's buyers at lows here, or it would be a bear bar, right? So there's buyers at lows. And look at 56, it gets stopped here. So this is a micro. Wow, I just clicked what a micro gap was. This is a micro gap, just a miniature gap within the trend already, and it's a trap for bears, and that's what and bulls get their two legs up to the EMA. Bar 59, huge sell. I think bears were desperate to get out after this trap because not only is this a trap, but now we have a different type of gap open, a higher low gap. That's major. This is major for the bulls. After a downtrend, that's major. You know what I'm saying? Like, to them, they're like, hell yeah. I stopped trading after this. I got a little ripped up, and I was like, you know what? I'm deep in profits today. I'm done. I'm trying to learn how to stop trading, how to overtrade and give up so many gains. I got to give you guys an update on my accounts. Not the best so far. I sized the hell up like 2 days ago. Okay. And look at the end of the day. Right when I stopped trading was the easiest day to trade. Look at what happened after bar 60. Trap after trap after trap. We still have these bulls that have their stops that never got hit. So we know bulls are in the market. We know bears are getting taken out because this got pushed up. This leg absorbed all the orders that was sitting right here momentarily because they ultimately do sell. So it temporarily absorbs orders, but then the market starts to stall and then bears start to get hungry and they short. But bulls keep this major gap open, creating a higher low. This is like, trying to think of the right words to say. So these are like micro patterns, right? Head and shoulder, double bottom, higher low, higher low, higher low. You guys see that? Do you see the two higher lows? Like this is a higher low, and then this is a micro higher low within a higher low, micro double bottom. These are all things that I'm able to catch, and it's important to pay attention to. I measure wicks. I don't measure wicks, but I look at micro double bottom. I look at where the closes are. Okay, this got buyers and went. So as you develop your price action skills, I know I was very oblivious to all these things I'm just spitting out right now, but just try and focus like on one thing for 1 week. Like 1 week, I'm gonna mark out all the gaps I see. That's actually a good idea. I think I'm gonna do that starting this week, right now, tomorrow. So for me, I'm gonna start marking out all the gaps I see so I can measure market strength while I am point counting. You know, maybe for you, you're chasing highs and lows, so you might have to say, I'm gonna miss a few trades, but I'm gonna force myself to get into a pullback just so I can see if there's a continuation because you keep getting trapped. You know, you got. That's what's cool about trading is it's all about you. So you gotta look at what you're doing and figure out a way around it. Because if I'm buying a small account, if I'm on a huge account and I'm buying here, I promise you I'm gonna buy here and here. But on the account, that's on the micros. On the E-mini, I'm not even thinking about that. I'm getting out right away. So back to the price action. I went off on a little bit right there. Easiest part of the day was the end of the day because so many trap traders. There's gaps here, gaps here, gaps here. Flag, great trend, trap, bar 72 is a trap, and then algo trading. This is a good sign for the bulls, bad sign for the bears, obviously. But also this could be a deeper pullback. We really don't know until tomorrow. Bulls need to break this to be considered somewhat bullish. Technically, just like on a different scale, just like this gap stayed open for the bulls, the bears are keeping their gap open too. So it's really cool how like price action works on this type of time frame, which is still the 5 minute, where you can zoom in and it works, or you can switch to 2 minutes. It's universal, right? In my fractal is the way my mentors say it. Yeah, that was the day. Double bottom, higher lows, a lot of bullish momentum, but bears made money. It was a broad bull channel. very broad bull channel. Of course, we don't know the channel until it's already done. That would be a nice goal to. I didn't even. Let's see. Yeah, that's a body to a wick. Let's do body to body. No. So yeah, that's a little funky. We had a bull channel and we broke the EMA and installed around it. Where we are in the market cycle. October 4th low, and we have a strong bar. I remember last year we bottomed out around October. So October 13th we bottomed out. And now we made a higher low. We've had pullbacks, and look at this bar at the bottom of this trend. So I just think I was thinking about it today. I was like, wow, we're getting bullish pressure at the bottom of a trend, and last year we had bullish October low, and then we pulled up. So it's October again. Strong bull bar after a strong bear bar, and that only happens in a range. So bears were able to close these bull gaps, and yeah, that means we're range bound. You know, it's the same thing we talked about in the 5-minute. Bears are keeping this open. Bears have this gap right now, and bears closed these gaps. And now bulls have to, if the bulls want to show their strength, we start to do something like this and start to close gaps. Maybe we break out, maybe we failed breakout and shoot down. After that, I don't know. All I'm saying is, in range-bound environments, we close gaps. And now, all these bull gaps just got closed. Who knows? Maybe we sell some more. I don't know. I try my best not to make anyone biased. That's why I try and talk about all three scenarios. You know, like this could be a pullback, we break, uptrend, or we just range. I don't know. But that's the analysis from an Al Brooks perspective. Quote unquote Al Brooks perspective. I got a lot to learn. I'm studying him every day, so just keep studying. I feel myself becoming a stronger trader with these videos. I hope they're helping you guys as well. Drop some comments if you guys want to chop it up, and I'm going to try and start posting charts on my Twitter page, and we can talk about those charts. Hit the follow button. Have a good day, everybody. I'll talk to you tomorrow.